Morning, guys. It's Monday, July 7th, 5:24 a.m. Central Time. Grain markets are sharply lower this morning. Ugly overnight trade. December corn futures down 12.5 cents at 424.5. November soybeans down 20.25 at 10.29. December Chicago wheat down 11.75 at 566.5. December spring wheat down 12.5 cents at 548.25. December spring wheat down 13.75 at 653. Trump spoke in Iowa on Thursday. Why don't we start there?
He sure did, and he celebrated the passage of his tax and spending bill, claiming that it will make America great again. He highlighted recent U.S. strikes on Iran, a decline in egg prices, and reduced border crossings. Although he didn't offer any specifics, he also reassured farmers that their workforce would not be jeopardized. Unfortunately, no new trade deals were announced.
So the prospect of trade deals being announced was a big deal in our row crop markets last week. Here's a December corn chart. We had a sharp rally Wednesday and also Thursday last week. And then because there was no new trade deal announced, I guess, and maybe there's some other stuff too, the market gapped lower last night and trade sharply lower this morning. So Wednesday, Thursday last week, there was this kind of rumor mill trade chatter type optimism that Trump could announce something with China or India or perhaps both. There was nothing like that involved in the speech. Trump mentioned ethanol a few times. He talked about the labor issues as it relates to the deportations and stuff, and says he has a plan for farmers to work through that. But as far as our markets are concerned, the trade deal announcement was lacking, and therefore we're seeing an equal and opposite reaction in the markets relative to like Wednesday, Thursday. Rallied sharply Wednesday, Thursday on maybe the idea that there could be a trade deal. No such trade deal announced. Same thing in soybeans. Gap lower last night. Pretty ugly overnight trade. The wheat market in the Chicago and Kansas City contracts, at least, also gapped lower. So not necessarily what the market or what the bulls at least would like to have seen with regard to Trump, the speech, and now price action.
President Trump's One Big Beautiful Bill appears to be a win for farmers. Signed into law on Friday, the bill adds $68.3 billion in farm program funding over the next decade. It raises reference prices under the PLC and ARC programs for the current crop, ensuring farmers receive the higher calculated payment. The legislation also increases payment limits, lifts income caps for those who earn most of their income from farming and forestry, and allows USDA to add up to 30 million new base acres based on planting history from 2019 through 2023. Crop insurance will receive $6.3 billion in new funding over 10 years, including increased premium support, particularly for beginning farmers.
I am not a policy person. I'm not going to pretend to understand what all of this means. Paul Neiffer, who is a policy person, will join me in today's premium video to discuss the big, beautiful bill and what it means on the farm. There were some positive biofuel implications here. Beginning in 2026, all feedstocks used for biofuel production must be produced in the U.S. in order to be eligible for the tax credits. So things like imported used cooking oil from China, no longer eligible for the credits, which should mean more soybean oil for biodiesel. 45Z was extended through 2029, although the SAF production credit was cut from $1.75 per gallon to $1 per gallon. The bill also included language that should boost biomass-based diesel. Again, Paul will join me in today's premium video, and we'll talk about some of the nuts and bolts of this whole thing and what it may mean for you guys on the farm.
President Trump's tariff deadline may be extended for some countries. Originally, Trump set a July 9th deadline for U.S. trading partners to finalize trade agreements before the implementation of his reciprocal tariff policy. However, Treasury Secretary Scott Bessent indicated on Sunday that countries actively engaged in negotiations may receive a three-week extension, pushing the deadline back to August 1st. Bessent said the U.S. is focusing on 18 major trading partners with several agreements close to completion. Only preliminary frameworks have been announced so far, including deals with the UK, China, and Vietnam. Talks are still ongoing with key trading partners like Japan, South Korea, India, and the EU.
So things are pretty ugly here this morning with regard to the markets, but it would only take one headline to change all this. And you could be right back to the sort of rally that you saw on Wednesday and Thursday if the right trade deal is agreed to or announced. If it's China and there's purchase agreements, maybe it's India and there's purchase agreements. We don't know. But I think that there could be a lot that happens either good or bad with regard to trade here over the next couple of weeks.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
This is a video that we do just about every year, but it's especially applicable this year. Chris and Shay joined me, and we talked about calculating potential insurance payments. So you're a farmer, you're in the heart of the Corn Belt, you bought 85% RP. With regard to corn prices in particular, we have at one point near the lows, we were close to 15% off of the spring insurance guarantee. And as you get closer to that price, you're getting to a point that for some of you guys could trigger indemnity payments. And there is a tool that we made available where you can punch in your APH, you can punch in your yield expectation, you can punch in your insurance coverage, and you'll actually be able to figure out how to calculate where your insurance safety net, if you want to call it that, kicks in, and what the payments will look like under different scenarios. And this is incredibly useful and actually extremely necessary as a grain marketing tool this time of year. If you're in Ohio and you're going to be way below APH, and that's your thought on your corn yield right now, you better get this calculator out and play with it, because it should impact your grain marketing and marketing decisions. If you guys want to see that video and you want to see the calculator and get all that stuff, go to standardgrain.com, sign up this morning. I will forward you a copy of this morning's email, which includes the video, the calculator link, all of the stuff we included on Thursday. This is like absolute decision-making type information. It's actionable. This is the sort of stuff that we put out all the time. People pay for this stuff because it's useful. The premium subscription is $50 per month. You can sign up at standardgrain.com. No other fee, no other obligation. Nobody will try to sell you anything else. Check that deal out this morning, guys.
USDA released weekly drought monitor data last Thursday. While temperatures across the Corn Belt were above normal last week, widespread rainfall helped mitigate potential stress on crops. Drought conditions improved in Illinois, Minnesota, Missouri, Iowa, and Michigan's Upper Peninsula. Currently, only about 6% of the region is experiencing some level of drought, down from roughly 25% at the same time last year. The High Plains also received rainfall last week, leading to improved drought conditions in South Dakota, Nebraska, and Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country, 12%, soybeans, 8%, winter wheat, 24%, spring wheat, 29%, and cattle country, 18%.
There is talk about widespread Corn Belt drought every single year. Every single year I've been doing this, somebody calls for a drought. The calls were a little bit louder this year, and it's July 7th. We're running out of time here for this summer Corn Belt drought. We've seen flash drought situations in the past. I don't know if that happens or not, but you're running out of time with regard to, say, the corn crop, the pollination period. The forecast and recent weather, just not super threatening. There was a lot of rain in parts of Iowa over the weekend, parts of northern Illinois, Wisconsin, Minnesota. The forecast is dry-ish for the next 5 days, but you go to this 5 to 10 day period, and there's quite a bit of rain involved in the forecast for the Corn Belt. Looking at temperatures, it will be a little bit above normal based on Euro model data over the next 7 days, but I don't think it's enough to be overly concerned about. Kind of similar stuff for the 8 to 14. So there's not a weather threat here right now, and that's maybe another part of the reason why the markets are sharply lower this morning.
U.S. corn export sales declined last week. Net corn sales were reported at 21 million bushels. The print was down 28% compared to the previous week and 37% from the prior 4-week average. South Korea was the largest buyer for the week. Net soybean sales were reported at 17 million bushels. The print was up 15% from the previous week and 62% from the prior 4-week average. Unknown destinations were the largest soybean buyer for the week. Net wheat sales came in near the upper end of pre-report expectations at 22 million bushels. The print was up substantially from the previous week and 58% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
Say what you want about the market. It sucks, right? Demand is great. It is very reasonable to say that this year's corn export program could be the best on record. We are within an earshot of the previous record, which was the 2020-2021 marketing year. That year was associated with a significant degree of Chinese buying. We have basically zero Chinese buying this year, and we're at a damn near record with regard to commitments. And before it's over, it could be a record. Soybeans kind of toward the lower end of what we've seen over the last 10 years. Not great in terms of export commitments. For the current marketing year, China has been the largest buyer. I don't think they bought anything yet as far as new crop is concerned. Last year, they waited till July, so it could be coming. Wheat export sales kind of just getting started.
Russia has slashed its export tax in an effort to boost sales. The tax, which was originally introduced in June 2021, has now been reduced to zero for the first time and will remain suspended from July 9th through July 15th. Over the past 6 months, Russia's wheat export tax has declined significantly from $60 per ton in late December to its current level. The cut comes amid a sharp drop in wheat exports. In June, Russia exported just 1.1 million metric tons of wheat, roughly a quarter of what was shipped during the same month last year. Russia still plans to keep the export duty in place, but will revise the base price accordingly in its calculation.
Russia is the world's top wheat exporter, is projected to be again this year. When Russia cuts taxes and they make it more easy, I guess, to export wheat at cheaper prices, it's just not a positive for the U.S. When Russian wheat gets cheaper, U.S. wheat gets cheaper, and the board is lower. I don't think because of this. I think it's because of the trade stuff and the row crops, but not necessarily positive news.
USDA reported multiple flash sales on Thursday. U.S. exporters sold 6 million bushels of corn and 8 million bushels of soybeans to unknown destinations for delivery during the current marketing year. Exporters also sold 195,000 metric tons of soybean cake and meal to unknown destinations. Of the total, 45,000 metric tons is for delivery during the current marketing year, and the remaining 150,000 metric tons is for delivery during the next marketing year.
Old crop soybean flash sale in July is not something that you see super often. We are typically rendered non-competitive this time of year, but here we are. So it's not a bad thing necessarily. What did cattle do on Friday? I'm sorry, Thursday.
Yep, cattle futures were mostly higher. Live cattle were 45 cents to $1.60 higher. Feeders were 10 cents lower to 82 cents higher. Cash cattle trade was mostly steady last week. In the Texas Panhandle, cattle were mostly steady compared to the prior week at 224. In Kansas, cattle were $1 lower at 224. Up here in Nebraska, cattle were steady at 230 to 232. And then over in the Western Corn Belt, cattle were unevenly steady at 230 to 233.
Outside markets are really pretty quiet to start the week. The Dow's off 25 points. The S&P's off 16. Treasury's just marginally lower. U.S. dollar is a little bit higher, but has been very weak. And that weak dollar has had arguably little to no impact on our grain markets. Crude oil is up 9 cents in the August WTI at 67.09. Have a great week, guys. We'll be back on Tuesday.